Good evening. This is Doc Severson for the Theo Night Report for a Thursday, May 18th. Now, if you read anything from the stock media yesterday, after yesterday's 45 handle decline on the S&P, you'd thought that the world is coming to an end. But you kind of zoom out and you look at something like this, like the monthly chart. There's not even, you can't even tell that anything even happened. You look at the weekly chart and you see a little red candle at the end of a huge rally like this, and you go, well, that's not that big of a deal, and you can barely even see anything on the daily chart. So the question stands right now, what kind of damage was done yesterday, and is this the end, or is this the beginning of the end? Well, there's two possibilities for where I see the market going from this point, and I'm specifically talking about the S&P in this case right now. And one involves an outcome that the bears don't want to hear right now. And the reason why I bring this up is because along the way, we've certainly had our share over the last few years of these seemingly unstoppable, everlasting rallies that just never seem to quit. And then we will have one red day come along. Right? We've seen this before. We'll have one red day come along, and then next thing you know, it's getting slingshotted up to the upside and creates even higher prices. Right? So we build up the negativity, and then what happens after that is it ends up slingshotting higher. So we have to keep that on the table as one possible outcome from this. Forget about the fundamentals, forget about how overbought the market is, forget about everything that you know in terms of what should or should not be happening. Market doesn't really care about our opinion of whether the market is overbought or oversold or is too stretched out or should not be up at this level or cannot rally from this level. Doesn't really matter any of that, right? The market will just do what it's going to do. It's just a supply and demand barometer. So one possible outcome from this is that we see the impossible rally from here actually cut through the 2400 level. And I could actually make a case for that happening right now with the amount of energy that we have at the smaller time frames, which has just been built up through all of this coiling action that we've had over the course of the last couple of months. So from range contraction leads to range expansion. And a lot of times if we see these one-day wonders, where we have a movement to the downside, gets everybody all negative, all stoked up, then we see a lot of that newfound negativity unwound to the upside through the slingshot move. So that is potential number one, is that, hold on to your hats. We could be seeing the beginning of the next move up. Again, I don't care whether or not I think that could happen or that could not happen. It doesn't matter. All I'm saying is that we've seen this movie before. And if we just have a one-day wonder, it usually gets unwound to the upside. Now, the second possibility that we may be seeing, and again, this is a real stretch with a 45-point move to the downside. That's really not that much, especially when you have a market that's up at 2,400. That was a bigger deal to get a 45-point day when the S&P was at 1,000. That was a big deal. Now it's not so much of a big deal. Again, we have to get used to the fact that the percentage on a percentage basis, that was not that big of a deal. It was a big deal when you look at the standard deviations. It was almost a 2.5 standard deviation day yesterday, but that's only because we have volatility that's barely just climbed out of the gutter and now is sitting on the curb at some of the lowest levels that we've ever seen. Notwithstanding, the second possibility that we may be seeing is what I call the shot over the bow. The shot over the bow. Now, anytime that we have some seriously corrective price action, it usually starts with some type of a pattern, and it usually starts with a day similar to what we had yesterday. So in other words, if we just zoom in on this little Ebola incident from back here, the real strong selling occurs at the very end of the move. So all of this stuff happened here where we dropped from, let's see how big of a move this was, about 1870 all the way down here to, so it's about a 53 handle move from top to bottom, which was enough to get your attention, but we closed much higher from the down there with a nice hammer, right? But all of this got started way back here. Okay, so this was a day where we went from about 1997 down to about 1965, right? So that by itself is a 30-some point or 30-some point haircut. That's enough to get your attention, but you can see how the market changed character right after that. So it was all very, very quiet, wasn't going anywhere, and all of a sudden this big red candle shows up. And after that, things start to move and it starts to become unglued and a lot more unstable, and finally ends up with a selling climax down at the very bottom where the worst of the news was already priced in. So it's days like this where we have this sort of the shot over the bow. The shot over the bow was an old naval term where basically a vessel would send a cannon shot over the bow of their foe to say the next one counts. And so that's kind of what's happening here. It's kind of a warning shot over the bow to say, look out, things are changing. And we've had these, even more recently, like back in 2015 when we had this big move here into August. Now, this one did come very quickly, but the initial shot over the bow was really on this day here, where we went from, about 2076 down to 2035. So about a 40-point day. That is enough to qualify as a shot over the bow. Everything changed after that. So if you recognize the shot over the bow and start to adjust your perspective from there. Now you can see that none of these, after the shot over the bow, this thing was just a straight plunge down. Take no prisoners. You didn't get a chance to get a bounce back up, unlike what we saw today. Now, one of my favorite ones goes back here to about 10 years ago. It was in February of 2007. And this was, as you can see, kind of like right before the market really did fall apart. Now, this was about a 60 handle day over here on the left-hand side here. So this came from extraordinarily quiet conditions. There was no warning, and all of a sudden, one day, we're just blasting to the downside. Now, you can see that what this did was, though, this did create kind of the slingshot move. After all this negativity started getting worked into the system, it was all expunged to the upside here. So all that negativity got flushed out to the upside. And then, but you can see what effect that this had on here. So let's zoom out on this just for a second here, because this is really, really important. So going back to this, you can see how quiet things were here. And then all of a sudden the shot over the bow came in board. And this really started to get things unstable and get things moving around again. Now, looking at today's price action, we'd love to see things starting to get unstable and start moving around again. We'd get two-way tape. We get a lot more premium in the option chain. We get some actual fear into the marketplace, and not this sort of, hey, we'll print all the fear away from what you're doing, right? Because that just takes price discovery away from everything. So, and again, looking at today's price action now from this perspective, you get the point that yesterday was really not that big of a day. This is really not that big of a day. It's all a matter of perspective that we have just not seen anything like this size recently, or at least since back here in March, right? So I guess when you combine the whole thing together with this, though, for the gap, the drop through there, this was the biggest downside day that we've seen in quite some time. So again, the question is on the table is, this is just going to cause a slingshot move. Prepare for it. Don't run away from it. Don't stick your head in the sand and pretend like this can't happen, because it can happen. So even though today's close was pretty weak and this was pretty unimpressive, right, that can happen. But the second thing that we could be seeing is really the beginning and that kind of a shot over the bow where volatility starts to kick in and trading conditions improve. I am voting for the latter case. That's it for tonight's report. Thanks for listening, folks. We'll see you tomorrow. Take care.